Okay, thanks. Okay, let's call to order the meeting of the Committee for Finance Administration and of the Horry County Solid Waste Authority. If we could have Reverend Coakley lead us in invocation.
Eternal God, we ask for your guidance and directions now as we seek to make decisions on behalf of the Solid Waste Authority and the citizens of Horry County. We know, our Father, that you are able to lead and direct us. For it's in Christ's name we pray. Amen.
Amen. Let's stand for the Pledge of Allegiance. Pledge allegiance to the flag of the United States of America, to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. Okay, you should have received a copy of the agenda. We just need to have the approval. If we can get a motion.
So move.
Motion, a second. Any further discussion? All those in favor?
Aye.
Okay, motion passes. We've got the agenda approved.
This is the audit.
Yep, the wrong one. Okay, yep, we'd like to welcome Mr. Clever here from Smith Staff, and he's going to do the presentation of the financial audit for FY 2014. Thank you for being here.
Good afternoon, everyone. I'm here today to briefly review the financial statements with you and address any questions that you may have as we go through the information. I am pleased to report that we issued an unmodified opinion on the financial statements. That starts on page 1 of the presentation. An unmodified opinion is also known as a clean opinion. This means that the amounts and disclosures contained in the statements are fairly presented in all material respects. The statement of net position is on page 7. I'd like to point out just a couple of highlights to you today. You'll see that total assets at year end were $77,715,000. This is a 2% increase from the previous year. The largest increases were in cash and investments and in capital assets. Cash and investments increased $441,000 and totaled $38,041,000 at year end. I would like to point out that $34,505,000 of that amount has been designated by the board for specific purposes, and I'll point out a note to you in a few minutes to show you what those designations are for. Capital assets increased $874,000, and this is primarily due to the piggyback expansion access road construction and the relocation of the grinding area. Total liabilities were $31,443,000. This is an 8.5% increase. The increase is primarily due to an increase in landfill closure costs for capacity that was utilized during the year. I would like to point out that the landfill post-closure care costs decreased $911,000, and this was due to the engineer changing his estimate of the post-closure care estimate to do that work. Total net position at year end, which is the difference between total assets and total liabilities, amounted to $46,272,000. The statement of revenues, expenses, and changes in net positions over on page 8. Here you'll see that total operating revenues were $18,231,000. That's a 1.5% increase, and the increase is primarily due to an increase in the unincorporated collection system revenues. They were up $232,000 during the year. Total operating expenses were $19,688,000. This is a 13% decrease. The big decreases were in depreciation, landfill closure costs, and landfill post-closure care costs. This was due to changes in the estimates by the engineer once again. Overall, for the year, the authority's operations resulted in a decrease in net position of $885,000. The notes to the financial statements begin on page 11. I'd like to point out just a couple of notes to you. Note number 1 begins on page 11, and it's a summary of all the authority's significant accounting policies. This note provides information on how various transactions are accounted for in the financial statements. Over on page 15, you'll see note 3. This is the note I referenced earlier about the designated cash and investments. You'll see amounts have been designated for closure, post-closure care, equipment replacement, construction, MRF contingency, OPEB obligation, and waste diversion. Note 5 begins on page 15. This note provides information about the composition and changes in the authority's capital assets during the year. Note 7 begins over on page 16. This note provides information about the closure and post-closure care liabilities. There's a table on the bottom of page 16. It discloses the current liabilities for closure and post-closure care by permitted landfill site. And the table on the top of page 17 shows the remaining estimated closure and post-closure care costs that will be recognized as the remaining capacity is used. The last note I'd like to point out to you is note 10. It begins on page 18. This note provides detailed information about the authority's post-employment health care plan, as well as the methods and assumptions that were used in the actuarial study to develop that liability. There's a bunch of additional budget to actual comparisons. I'm not going to get into a lot of detail there, but I would like to point out our report on compliance and on internal controls. It's on page 40. It's the last pages of the presentation. This report states that our audit disclosed no instances of non-compliance and no material weaknesses in the authority's internal control structure. I'm also pleased to report that our audit did not disclose any other kind of findings that would warrant issuance of a management letter this year. That's a brief overview of the financial statements. I would like to conclude by saying it was a pleasure working with the authority staff in completing our audit. They were very helpful, and I'd be happy to address any questions that you may have.
You did get full cooperation from staff, no problems, challenges in dealing with the information?
Yes, they're very helpful, no problems whatsoever.
Great. Questions from the committee?
What areas did you audit?
We audited all the areas, cash, investments, fixed assets, liabilities, receivables, closure, post-closure care, revenues, expenses.
You did a sampling of all those areas, right?
Yes, sir.
One of the paragraphs I read had to do with corrected and uncorrected mistakes. What were some of those? You didn't put any of those down.
And that was in, where would you read that on?
I think it was on page 2. It just, the headline said corrected and uncorrected mistakes.
There was only, in the audit report, we made, in conjunction with the audit, there was only one entry that was made, and it related to, I believe, closure and post-closure. There were no uncorrected misstatements in conjunction with the audit. There was one entry that did need to be made to get the closure and post-closure care liabilities to where they needed to be.
What was that?
It was just,
It had to do with where Vance had updated his cost estimates for closure and post-closure, so the way we calculated the adjustment, year-end adjustment for the capacity had to be adjusted.
Okay.
he changed his methodology a little bit, so the calculation needed to be changed. Prior to us getting here, that had not been done, so we did make one entry in the
Oh, okay.
Ken, do you want to explain how he figured the calculation
Right.
for this?
We had, for closure and post-closure, we had been using 2007 cost estimates, and every year we did an increase for inflation. This year, since we had a closure project last year, he updated those costs to 2015 actual costs. So therefore, like I said, the method that we had used in the past to calculate the capacity, we had to adjust it a little bit. Like I said, I do an entry prior to David getting here, but that's one of the things that he reviews. He reviews the entry that I made, and we had to make one adjusting entry for that. So
Okay.
that was the only adjusting entry we had this year. Our goal every year is to have none, has been my goal, but we've gotten it down. Last year was 2 adjusting entries, this year was 1. So our staff is doing a really good job to make sure we have everything corrected.
Okay. In your opinion, is there anything that we could do better?
In regards to the accounting function, I think everything is in real good shape. We worked over a number of years, annually making refinements to all the processes as well as to what we're provided it to do the audit, which has helped us to keep costs down over the years. So it's an evolving process, and I think it's in real good shape now. And we're always looking for ways to be more efficient and streamline the process. But as far as the control structure and those type things, everything is in very good shape.
Thank you.
I know in some years we focus on specific areas just to kind of do a checks and balances. Were there anything specifically this year that you focused on that was different from years past?
I think this year, one of the primary focuses was on the closure and post-closure in conjunction with Vance changing his methodology. We spent extra time reviewing what he did. We had a few conference calls ahead of time prior to him finalizing that to make sure everybody was on the same page. So I would say we spent probably twice the amount of time this year on that area than we would historically have done.
Great.
I felt like they also spent a little extra time this year, I said, on some of our accounts payables as well. This year it seems like we pulled some different things for them that I don't remember pulling in previous years, so I could tell they put some different focus on some different areas as well this year.
Further questions from the committee? If not, we've got a recommendation from staff that the committee would recommend to the full board the adoption of the fiscal year 2014 audit.
I move that we accept staff's recommendation and take it to the full board with that recommendation.
Motion
Second.
and a second. Any further discussion? All those in favor?
Aye.
Opposed? Motion carries. We'll do that Monday night at the board meeting. Okay.
Did you say that?
Tuesday night.
Excuse me, Tuesday night, yes. Sorry. Good. Mr.
Let-
Clever, thank you.
Let me say too, Ms. Thompson, if any of the board members, board members wants to sit down and talk specifically about the audit and the book and the reports and the charts, we're very open to do that. And we certainly want everybody's questions answered and everybody to feel good about where we are. And so just let us know.
We appreciate the hard work of staff and also the accountants in working towards getting us to this point. So thank you for doing that. Thanks for being here. Good. Thank you so much. All right. See you Tuesday. Thanks a lot. Next item on the agenda, quarterly financial update. Ms. Bidding?
Yes, those start on page 40, and what I've got here for you, of course, are the regular financial packet that is normally in your board book, and I thought we'd just kind of take a little bit of time, kind of go through these now that we finished the first quarter of the year. You know, we should be at 25% of our budget. Like I said, just kind of wanted to point out to you on page 40, you know, our designated accounts, our closure and post-closure. You know, we've got $17 million in our designated account for those, and as you can see, our liability is $26 million. So just, I like to kind of keep you abreast of where that difference is on the designated versus the liability. In the middle of the page, you'll see the tipping fees. We've got solid waste at 31% of budget, the mixed construction at 26% of budget, and yard waste at 23%. So our solid waste still continues to be ahead. I did take a look, Mr. Thompson, you had asked me about the solid waste and where that kind of was going, and I did kind of take a look at it. We've got a couple of companies that have seemed to have brought in a good bit more the first part of this year versus the first part of last year. Lead Disposal and Waste Industries being the top two that have brought in more tonnage this year. So just kind of tried to track it to see where maybe, you know, it was coming from. Those two companies kind of stood out. So Mr. Bessett had mentioned to me too, could be some of the weights could be a little bit heavier due to rain as well. You know, we had quite a bit of rain this first quarter, so
Maybe their business has picked up.
that's what I hope so.
Yeah.
Like I said, I hope it continues, you know. At the bottom of that page, of course, is the C&D processing facility. The revenue is at $30,000 for the first 3 months. The expenses are at $79,000, which is a difference of $48,000 for the first 3 months. But they have saved 11.7 days of airspace by utilizing that facility. Materials recycling facility, which also includes collection and hauling department, their revenue is at $769,000, and their expenses at $687,000. So their revenue is over expenses for that area for $81,000. They also have saved 23.92, almost 24 days of airspace first quarter of the year. So they're doing a good job. Page 42 is the income statement. Like I said, we should be at 25% of budget, and our revenue right now is right on track at 25.28% of budget. With the tipping fees being at 30%, and the MRF over there is right at 25%. So like I said, obviously it's our tipping fees that's got us a little bit above. The operating expenses are below. They're only at 21.65% of budget. So staff is continuing to watch those expenses very closely, monitor, and they're able to keep everything under budget, which is good. As you can see, for the year, we're at $735,813 with our revenue over expenses. So we're going to continue to watch this. Like I said, each staff is kind of, watching and monitoring everything, and they're keeping everything, well under. Just stop me, as we go through here. If you've got any questions or anything that I can answer for you, don't hesitate to stop me. Page 43 is just our revenue report. Kind of gives you more of a breakdown, of course, of the different revenue areas that you can kind of see, kind of where we're, over with the tipping fees. Of course, as you can see, the solid waste is at 31%, and our clean wood is at 78%. We're continuing to get a lot of clean wood from the factory over there, as well as, coming in through the landfill. And our shingles, of course, are up as well.
So the overall C&D impact, budget-wise, we're tracking pretty closely
Yes, sir.
Yeah.
We are. We're still
to the
continuing.
budgeted amount, which
Right.
obviously took into account the reduction.
Exactly, yeah, and I've got that pages in here where I'm tracking it each month.
I'm sorry, I'm jumping ahead.
That's okay, that's all right, like I said, and just so happens, like I said, I did kind of an analysis, and we are, we had budgeted to be for the first, 3 months of the year, we had budgeted C&D to be about 18,658 tons, and we're at 18,611 tons. So we're right on track where we budgeted. We still are seeing about a 23% decrease over last year this time, but we still had flow control last year this time. So, but we are on track for what we budgeted. At the C&D recycling facility over there, they're at 24% of budget, which is, like I said, which is good. And like I said, the recyclables are at 25% of budget. And then the store at the bottom, as you see, they're at 31% of budget. They also have been doing quite a good business over there. So everybody's doing a good job with their revenue. Page 44 is the expenses, and like I said, we've got just a few that are just a little bit maybe over budget, over the 25%. That's typical with this first quarter because a lot of things are paid. That first year, for instance, maintenance contracts. I have a lot in my department that are paid the first of the year and for the whole year. So therefore, like I said, I've used that entire budget, right at the beginning of the year. Same thing with a lot of subscriptions, things like that they pay once a year. A lot of those are paid the first of the year. So that's what's caused these to be up just a little bit. You'll see it start to kind of trickle down as like I said, as we go throughout the year. But everybody's doing a really good job. As you can see, none of them are way out of line. Everybody's staying right in within budget, their expenses. Page 46, like I said, just gives you a breakdown of the different tonnages, and like I said, that's what I just wanted to point out with your mixed construction. There's that 23% decrease from last year. Yard waste is over last year by 4.9%, and solid waste at 2.6% over last year. Page 50 is the C&D recycling facility. I just wanted to point out they did have a good month in September over there. They took in a little over 1,000 tons. So they're trying to gradually increase that. I think Bill had told me they're trying to kind of set some goals over there to reach, every month or every so often try to get to a certain level. So I know they're setting some goals and they're trying to reach those goals over there. And they're, like I said, they're working hard. I think that's all I had really for the actual financial statements. If you've got any questions with those, I'll go into the transfers next.
Were you going to give us an update on policy changes with the electronic billing and the credit card, how we were doing with those?
I sure can. I can give you an update on that as well. Like I said, the P card, the purchasing card, is working tremendously. Like I said, we've seen a tremendous decrease in our purchase orders and in our check writing, which has been, wonderful for our area. It's definitely a money saver. On average, I think we're averaging about $145,000 a month that they've been spending using the purchasing card. We're doing a lot of good tracking with it as far as monitoring it. within the finance department with the different reports that we're running. Like I said, I run a general ledger report that automatically transfers into our GL each week. So, like I said, it's working very smoothly. Everybody seems to be enjoying the use of it, and like I said, it's been definitely a benefit to the department all the way around. We've had really good response from our vendors as well. The electronic billing, we're still getting customers signing up more and more for that. That continues to increase each time we do a billing. And of course, we just did our first quarterly billing with the cardboard billing. So that was the first time they'd gotten their statements electronically. So we're hoping to get more of them this next go-round with our next billing. We also are going to do an automated billing for our cardboard billing. We're going to start with that. It's been done manually, which is normally taking someone in our department about 2 days to manually key it in and send it out because it's just a quarterly billing. But we've got an automatic billing that's going to generate for her, so that'll hopefully eliminate some time for her as well. So we're trying to look at everything we can, which, like I said, kind of brings me, I had one thing on here that I was going to mention that we're going to kind of look at too within this next month. I've got a conference call next week with Wells Fargo to start working on our online bill pay. That was kind of our next project that we really wanted to take on within the department. I felt like we kind of had to get some of these other things taken care of first before we took on something else. But that's our next one, is our online bill pay. They've contacted us about it. I know, like I said, the county uses it for their taxes. That's something we're definitely interested in doing. It'll, like I said, save a lot of time. And people have asked for it. They've requested it. People are not wanting to send checks anymore. They want to pay online. So, like I said, we're hoping that that'll eliminate a lot of the credit card fees. You know, we had talked about, offsetting those credit card fees, and they wanted us to hold off until we got this in place, and so that's our next step. I'm going to hopefully get that started and have an update for you maybe next month at the board meeting on where we are with that. So that's kind of our next plan to save some money. The biggest thing has been the check writing in-house. That also, like I said, has been a tremendous time saver, by all means, not having to run to the county and get checks signed. We have thoroughly enjoyed having that freedom to write our own checks and be able to process them here as well. But I think also the direct deposit, I should say that I can tell that having everybody on direct deposit has also been nice. Like I said, it's streamlined things. Maybe not everybody likes direct deposit, but it's streamlined things tremendously. And then, I know I've had questions asked, well, how has it saved us money if we're still sending out stubs? Well, the direct deposit was more of a safety feature. I think that was the one thing that the county told us their main reason for going with it was so that there wasn't outstanding checks sitting out there that had not cleared the bank, that type of thing. So that was more of a security feature for that point. Like I said, taking and processing the checks in-house was more of a money-saving feature. So all of those new processes are definitely paying off. We can definitely see a lot of benefits, and it's freed up our time, which has been a big help to the finance department for sure.
Great.
Any questions?
Well, that was one of them, if we were still taking the credit cards and losing that amount of money, but you're going to wait to do that until you get that fixed.
We are, yes, ma'am. And like I said, I was supposed to meet with them this week, but they were tied up, so I've got a meeting with them Tuesday to get that started. The other thing I have in your packet, of course, are the transfers. We had set this up some time ago where every quarter I take a look at our cash and cash equivalents versus our revenue. And if there's money available, taking into consideration 15% of our annual revenues, we could do a transfer. And what I've got for you is you'll see there should be two sheets. One will say July 1st, 2013 through June 30th, 2014. This one is for the last quarter of last year. I have this one now because I try to wait until we've got our audit completed. We've got actual figures, so we're kind of truing everything up for the year. If you remember, in the third quarter, we had to transfer money back out of piggyback expansion because we were at a deficit, which normally happens. That third quarter of the year is kind of a rough one for us. So when we hit the fourth quarter, I was glad to see that we were able to transfer money back. We could transfer back $579,475. And like I said, I'm going to request the board on Tuesday to approve transferring that back into the piggyback expansion fund for that. That was for the end of 2014. Then I have another one in there also for the first quarter of this year, which is the July 1st, 2014 through the September 30th, 2014.
I have a copy of that one.
You can get a copy. Okay. I maybe had handouts of that one. It got left out. Somehow it got left out of the packet.
I got the one for July 1, June 30th.
These-
That was it.
All those are the same.
So nobody has
That's what
that.
we've got.
So you don't have the September.
Mm-mm.
Okay, I'm sorry. I thought everybody had the September one. With the September one, I'll hand this around, it was $1,187,000, I think, that we could transfer. There was a little bit, 600, I think it was around $6,000 that we could transfer back into the MRF contingency. That's where we always look first. If there's a profit to the MRF contingency, we put that money there first. That's the way this was set up. And so there was $6,000 we were going to transfer back into the MRF contingency. We also usually during the first quarter, we have $175,000 that we put into OPEB. This is our final year of doing that. That is a catch-up. We had it set up so that for 5 years we would play catch-up, get it caught up in current. This is the last year that we'll have to put that money into it. We'll just continue from this point forward, just putting it in every month like we have been doing. So I've got $175,000 I want to transfer into the OPEB, and the remaining amount going into the piggyback expansion. I think there was also, I take that back, there was $40,000 I wanted to leave in the undesignated contingency. Doing so to purchase the radios that we purchased, to cover the radios that we had to purchase, as well as Bill wants to purchase a portable pressure washer. And so we've got those two items that we want to leave a little bit of money back in undesignated contingency to cover the cost of those two items. So I apologize for you not having copies, and like I said, Susie's going to get us some copies of those. Other things, let me just kind of, while we're waiting on those copies as well, a couple other things I just want to tell you that we have kind of coming up during this quarter. Financial assurance is something that I'll begin working on the end of November, 1st of December. It is due to DHEC 120 days after the close of our fiscal year. Thank you.
It's actually on page 56. It did make it.
It did make it, okay.
Yeah, we didn't get copies, hard copies, but it is.
It is
yeah,
on,
the last
okay.
page. Yeah.
Okay, it's on page 56?
Page 56.
Okay. Yeah, and I've got it broken out on there what the $40,000 is for, $25,000 for the radios and $15,000 for the pressure washer.
Okay.
But anyway, yeah, like I said, during the end of November, 1st of December, I have to have the financial assurance put together, so I'll bring that to the board probably at the November or first, maybe it might be December's board meeting. I'll have that for you to review and take a look at. Also during December, I'll be putting together the capital budget information to send out to all the departments. Usually we try to start working on our capital budget and have it in usually first to the middle of January. They'll be working on their capital budgets and getting those in. And then during January, I'll send out the information to all the departments for their operating budget. So as soon as we get finished with 1 year, we're already starting on the next year already. So that we'll have those things going on, like I said, these next couple of months.
Good.
So if there's anything from the board, any projects, anything that you can, that you see that you want us to take a look at, anything that you want us to work on for the budget this year, I'd appreciate any input you can give me. I'd love to sit down and talk with you if there's any ideas that you have, like I said, that we could incorporate into the budget this year. Are there any other questions with any of the financial reports or anything that you've got there that I can answer for you?
Questions from committee?
Allowances for doubtful accounts, what are those?
That $15,000 that we put in there, that's in there each year as kind of a catch-all for if there were any accounts that we felt like we were going to have to write off what we consider a bad debt. The auditors look at that every year, and they ask me about that amount every year. We have one account, and I apologize, I meant to look up and see how much that was. We have one account that we're working with, that we have one only that is still outstanding from last year that we're continuing to work with, and we're continuing to get payments from them on that account. So like I said, we're very fortunate, and like I said, it doesn't reach that $15,000. If it did, like I said, that's when David always questions me. I always try to work with everybody to get everything in by the end of the year. We have that one that we are working with.
You're gonna do investments after this, finances, or is that in that?
Investments.
Thank you.
If you've got a question about investments, I can answer that.
You had a listing of Chesterfield, some of the Part B investments, Chesterfield schools, South Carolina Treasury Investment Pool, that says they were not rated. I didn't think we could invest in things that were not rated or safe.
The South Carolina investment is a treasury, that's through the state or whatever. Like I said, the county handles our investments. I don't have a lot of information for you on that. That Chesterfield, it was what they invested in through that Wells Fargo. When they handle that, that's something that they've invested in. The county has to approve those, and they know our guidelines as far as what we're allowed to invest. So they're the ones monitoring those. I can definitely, get in touch with them and find out if there's, anything, any information you need on that, but that we always have to request security information from them, that kind of thing, and that comes strictly from the county. Unfortunately, we don't have any control over our investments.
Because I wouldn't think that would fall under what we could do.
Well, and like I said, I don't disagree with you, and I can definitely ask them about that. I'll get in touch with Roddy at the county and find out about that.
Thank you.
What types of returns overall are being recognized?
As a matter of fact, like I said, we've seen some really good returns recently on those investments. In our financial reports, you have seen kind of where our interest income is, and it may not reflect it as well as it should, because we also now, with these investments, also have to record the change in market value. And in the past, what we were doing is we were recording that change in with the interest. So it didn't give a true interest figure. And so when David was here this year, like I said, at the end of the audit, we talked about that, about how to do that. And we decided that we're not going to do that starting, it might be in these reports, I have to go back and look, but we're going to break it out. You'll see a separate line item. There'll be a line item for interest income, and there'll be a line for change in market value. Because like I said, we wanted to be able to reflect our true interest. For instance, this month, we received over $19,000 worth of interest just on the investments with Wells Fargo. So we are seeing some great returns.
Good.
We're very pleased with that.
There was another question. We were talking about catching up with the insurance.
With the OPEB?
OPEB?
Yes, ma'am.
Okay. I was reading some of that under that, and the funding policy, it says members of South Carolina RS are required to contribute at a rate of 7.5% of their covered wages. The Solid Waste Authority is required to contribute actuarially at a determined rate, currently at 10.6. Would you explain that?
Yes, ma'am. That's the retirement system. And last year, employees were required to contribute 7.5%, and Solid Waste Authority was 10.6%. And that went up again starting July 1st. It went up to 8% for employees and 10.9% for Solid Waste Authority. This is the last year that I know of that they had a built-in increase. They sent a notification out several years ago that said that each year it was going to go up 0.5% for the employees. And I can't remember if there was a set rate for the Solid Waste Authority or not. But that is the retirement system, and it is mandatory for employees.
Okay. Okay.
That's good? Okay.
Any other questions from the committee on the financial update? Very good. Thank you. Next item on the agenda, the annual bonuses.
Annual bonuses. Just wanted to mention to you that they were approved in our budget this year when we approved the budget. So we will be distributing those at our dinner again this year, as we did last year. For the same amount, it's $500 for all employees, for all employees that are on payroll as of, I think, like November 1st. Last year, the bonuses were a total of $66,000, with $34,000 of that being for the Solid Waste Authority and $31,000 of unincorporated collection system. So just wanted to make you aware that we would be distributing those.
Did you do that on a percentage basis?
No, ma'am. Like I said, we do a flat $500.
Okay.
And that's followed what Horry County's done in the past.
They do a flat amount as well. Yes,
Flat,
sir.
yeah.
Yeah, but their amount's never been $500.
No, ma'am, it's not the same amount. We just have stuck with the same amount that we've done every year. We haven't increased it or decreased it.
Okay.
We've done, how many years have we done that now?
We did the flat 500 for all employees probably for the past, I'm going to say maybe 2 years. Prior to that, we used to have a kind of a tier schedule, depending on how long you'd only been here, 6 months,
Yeah.
that type of thing. And so we kind of did away with that a couple of years ago and just did a flat $500 for all employees. But it's been $500 for several years,
Yeah.
many years.
At least 3 to 4.
Yes, sir.
Okay. Any questions about that? Any other business for the committee or from staff?
Well, I did have a quick question.
Yes, ma'am.
One of the items in there was settled claims.
Settle claims. In the audit,
I'm assuming that it's someone that is suing the solid waste authority, employee or someone else.
Is that an audit?
I
Or the,
don't, was it in the audit?
Let's see, in the audit. You know where it is in there? Mark?
Lawsuit.
Note 13, I don't know what page. Page 21.
Or page 20. Under the litigation, must be? Yeah, that, like I said, that has to do with any lawsuits that we had pending last year, during
Okay.
last year. And like I said, you know, we get, we have to contact the attorney that we have been working with during the year to have any kind of various lawsuits that may be outstanding. I think last year there was one still pending that was settled during last year. So that's just a note that they have to put. We currently don't have any outstanding lawsuits.
Okay. And I'm assuming all of those were within our insurance?
Oh, yes, ma'am.
Okay.
any other questions from the committee?
None here.
Anything else from staff?
No, sir?
Thank you for your hard work, and we'll look forward to hearing the full report on Tuesday night.
Okay, good.
All right? If there's nothing else, we'll accept the motion for
I
adjournment,
move.
Second.
and we'll adjourn. Thank you, everybody.
Thank you.
See you on Tuesday.